Hey, good evening, everyone. You're very welcome to our Public Sector Mortgages webinar. My name is Ray McMahon. I'm the Chief Commercial Officer of ICS Mortgages. And this evening, we're going to take you through a step-by-step guide to applying for a mortgage. We're going to share some top tips about what to do when purchasing a property and talk about our mortgage products, which have been designed specifically for public sector employees. So the running order for this evening is we'll have just a quick introduction about ICS Mortgages, who we are and where we've come from. Then with regard to the mortgage product for public sector employees, we'll talk about the features, we'll talk about lending guidelines, we'll talk about the various different options, rates, and we'll take you through some examples of the product as well. We'll also spend a little bit of time talking about the mortgage journey, and then we'll have some top tips from some of the experts to discuss when you're looking for a property. And then we'll have some questions and answers at the very end. So I'm delighted to say that we've a really excellent panel this evening. So we've got Tom Dowling, who's a lending team lead. We've got Fiona Mcginn, and Fiona is a senior credit manager within our credit team. Tom Birch is the head of our direct lending team. And then I'm especially delighted to welcome Graham Murray from Cherry Fitzgerald, and Graham is a regional director with Cherry Fitzgerald. So this evening we're going to talk about what's required when you're looking to take out a mortgage, when you're looking to buy a new home. It's a huge decision. It's probably the biggest financial decision that you'll make in your life. When you compare it to all the different sort of financial commitments that you have to make, it's a very significant one. And it does require planning. It requires a little bit of research. And here at ICS Mortgages, we're trying to make that process as simple as possible and as streamlined as possible. And really, this webinar is devoted to achieving that sort of demystification of the process. So let me tell you a little bit about ICS Mortgages. We've been around since 1864. In fact, the ICS stands for Irish Civil Service, and the Irish Civil Service Building Society was founded then. The parent company is Dilos, which was set up in 2013, and in 2014 we acquired the ICS Mortgages business from Bank of Ireland. We currently have close to $1 billion of mortgages under management. We offer mortgages to all mortgage customers, including first-time buyers, movers, switchers, and buy-to-let investors. We distribute our mortgages through a nationwide network of brokers and through our direct lending channel as well. So we were very much created as an entity to serve the needs of the public sector, and it's a part of the market that we're very comfortable with. We're delighted to announce as well we've won a number of awards since we entered the market. Brokers Ireland voted us as Lender of the Year in 2018. Again in 2019 we won an award from Brokers Ireland for excellence in mortgage service. The Association of Irish Mortgage Advisors, the AIMA, voted us Best Mortgage for Property Investment in 2019. And for the last 2 years running, Public Sector Magazine have awarded us the Best Mortgage for Public Sector Employees. Just moving on then to the parts of the market that we lend to first-time buyers, we lend to second and subsequent buyers, and we lend to switchers as well. And a feature of our switching product includes debt consolidation, and that's a very popular element of the product, and we see quite a bit of business with that product in mind, and we'll spend a little bit of time talking about what's involved in that as well. Okay, so with that, I'm going to hand you over to Tom Dowling. So Tom is the head of our broker lending team, and he'll take you through some of the product features.
That's great. Thank you, Ray. Good evening, everybody. As Ray mentioned, Tom Dowling is my name, lending manager with the lending team here at ICS. Very welcome to this evening's presentation. So as Ray mentioned, for 2020 and 2021, we've been voted the best mortgage for public sector employees. This evening, I'm just going to give you a quick run through the reasons for that in line with our key features, special features, I suppose, for public sector employees, and some of the guidelines and some tips as well. So to qualify for the product, obviously we need an employee or to be employed with the public sector. We will have joint applications, but only one applicant actually has to be a public sector employee to avail of this. So again, you could have a partner or a joint borrower who works in the private sector, and we'll be able to, you'll qualify for this product. So the first measure that we look at, I suppose, is the income. You're all on pay scales, so we'll go up 2 points up your pay scale within your current grade for making our initial assessment. With regard to non-basic income, we will look at the following. So overtime will be the first when we look at, so we will allow up to 100% of regular overtime. Usually it'll be based on the figure that's on your employment details summary for the previous year. So we'll subtract the base salary, we'll see what was based on the overtime in that year, and we'll allow up to 100% of that. We'll also look at allowances. So again, 100% of contractual allowances, these will be factored in, I suppose, assuming that they're confirmed on your salary cert, and there's evidence then of being in receipt of the previous year as well, or on target to earn that in the current year. One of the features, I suppose, of being an employee in the public sector is that if you are successful in a promotion, there could possibly be a 1-year probationary period, which is standard, I believe. So if you have been successful in getting the change of role, we will look at your previous roles, but we should be able to waive that probation period. Also, the same applies for new entrants coming into the public sector. We look at it a little differently. I suppose it's case by case, but we want to maybe see what your employment history is. But on a case by case basis, we have and we will look to waive that probation period. So on our lending guidelines, so for the product offering, so we look at first-time buyers and we lend up to 90% loan to value. Second subsequent buyers, we can go up to 80% loan to value, and then switchers. So for a straight switch, 90% loan to value, but we'll also look at people who are looking to switch and release equity, possibly for debt consolidation, home improvement loans, and that type of thing. So 80% loan to value would be the metric on that. We will look at income multiples, so we go 3.5 times your gross income. So what we covered earlier on, or the previous slide on the 2 points of the pay scale and 100% of those allowances or overtime, we will take up to 3.5 times those. So if you have a couple with combined income of 100,000, including those details, we can look to borrow up to 3.5 times. So we do have some worked examples on this further on in the presentation, which will give you a good idea as to the calculations and what to expect. Our minimum loan size is 80,000 and our maximum loan size is 1.5 million. This is limited to a 75% loan to value once you go over the 1 million mark. Loan term is a minimum of 5 years and a maximum term of 35 years. Our product values, we look for a minimum property value or purchase price of 100,000. There's no maximum on that. And again, our age, we'll lend to anybody who's 18 years or over and up to the age of 70 on maturity. Our income multiple, the income requirement or the minimum income requirement on an application is 25,000 per application. So that can be made up of a single applicant or a joint application. And just to know as well, I suppose the loan to value that I mentioned earlier, this represents the difference between the mortgage and the value of your property. So for example, a mortgage of 90,000 on a property valued at 100,000, again, that'll be 100% loan to value. So some of the key qualifying criteria for our mortgage offering, again, as I mentioned previously, at least one of the applicants must be a public sector employee to avail of this product. All properties must be located in the Republic of Ireland, and it must be used as your principal dwelling house. So it has to be owner occupied. It has to be the intention has to be used for your home. Applicants must have required permission to reside and work in the state. For each application, we would look for a valuation on the property that has been selected. So again, we'll discuss the different stages further on in the presentation, and that we'll cover off on the valuation. We do also look for security and buildings insurance on the property. We need proof of that before we draw down or before funds issue. and we look for life cover as well to cover the value of the mortgage. Again, we do have different agencies internally with life companies that we can organise quotations for you at that stage as well. Our minimum age of applicants is 18 years, and as I mentioned, maximum 70 years on the expiry of the mortgage. Just, I suppose, applicants on each application, we need demonstration of proven repayment ability, and this is based on a stressed mortgage repayment. So I suppose just some pointers on that. The most common way of proving your ability to make a mortgage repayment would be through savings. So if somebody has a regular amount going into a savings account each month, we'll take that into consideration. We'll take rental payments. On the savings piece, I suppose the key to it is try not to oversave. What I mean by that is we do have cases that people try to save as much as they can, but it puts too much pressure on their normal current account and their day-to-day expenditure, and they find that they have to dip into their savings monthly. So we'd be looking at a net monthly savings in that scenario. So the key to it would be save what's affordable, and we can assess then to see that it demonstrates the stress mortgage repayment. A few other pointers too as well on the likes of operating current accounts. Minimise the amount of current accounts that you have. We do have applicants who are applications that come through and they might have multiple accounts that are really not necessary. So it's just to minimise that, and it avoids then, referral fees or bounce direct debits, that type of thing. Try and keep the conduct of on your current account, in line with the limits on the account. So don't be stressing too much on an overdraft. Try to minimise transactions to Paddy Power and organisations as such. Credit sometimes don't like them. But again, it's not enough to decline a case outright. We do look at the overall merits of a case. So I suppose the financial conduct on your current accounts is key. So just to reach or to try and keep it within the limits. Any issues or concerns on previous credit history, reach out to us. Look, have a chat about it. We're happy to, even if a case is not ready now, we're happy to review and give pointers and give you a step-by-step approach to getting mortgage ready, as it were. So we're here throughout the whole journey from initial inquiry right to drawdown. And sorry, just on the last point as well, was just on the minimum deposit for first-time buyers is 10%, so it's 90% loan to value. On the flexible product options that we offer on the product, so again, we have an overpay facility. So a lot of our applicants will go for one of our very competitive fixed rates, and they look for the flexibility to possibly make an overpayment throughout the life of their fixed period. So we'll allow up to a 20% overpay facility. So that can be in either a lump sum or regular overpayments up to 20% within a 12-month period, and that's without penalty. Mortgage breaks, so we've moratorium for 3 months up to 3 times throughout the term. So again, for education, baby break, medical expenses, things like that. Again, it's nice to have that flexibility with life, life-changing events. And then our rates, so we have loyalty loan to value rates. So as the customer's loan to value reduces, we would look to be able to possibly move you on to a lower rate band once we've received a new valuation. So again, we'll always try to give you the best long-term value. On the rates in particular, so we're currently offering a variable rate, a 3-year fixed and a 5-year fixed. As I mentioned previously, they're all loan to value based, so you can see the different brackets starting at 50% or below. So our entry rate will be 2.7% on the variable. Our 3-year fixed is at 2.45%, and our 5-year fixed is at 2.4%. So again, depending on your loan to value, how much savings you have, that type of thing, the rate will be scaled according to that loan to value bracket. The key to remember here as well is that we do have very competitive very competitive rates with low APRC. So the annual percentage rate calculation. Again, if you elect to go on a fixed rate, you will refer to either a variable rate based on loan to value, or you have the option to refix it. So the long-term cost of credit here with those low rates is very favourable for the customer, as it were. So it's just to bear that in mind also. So thank you for your time. I'm going to pass you over to my colleague Fiona, who's just going to run through some work examples.
Thank you, Tom. So hi, everyone. My name is Fiona Mcginn. I'm the Senior Credit Manager in ICS Mortgages. So our team are the ones responsible for doing the actual credit assessment. So we look at your mortgage application form and all the supporting documentation that you've submitted in through to us. So your bank statements, pay slips, salary certificates, your employment details summary. So when we're looking at assessing your income and your full application, we want to make sure that you meet all the criteria that Tom previously went through there. And then we'll look at your income to see if, once you are eligible for the mortgage, how much of a mortgage can we actually offer you. So by doing this, we'll look at your salary certificate, your pay slips, and your employment details summary. So on your salary certificate, your employer is going to confirm your basic income. When we see your basic income, we can find the salary scale that you're on as a public servant. We can then go, just for example, you're on pay point 5, we will increase the basic income that we can use and use pay point 7. Then we need to just ensure that any additional income that you're entitled to, such as allowances, overtime, premiums, that your employer has confirmed on your salary certificate that these are regular, and that we will check that we can see these on your pay slips, and then we will check to see that you've been earning at the same level in the previous years. So this will be on your employment details summary. So it might be better we'll take you through some worked examples as to how this will work in practice. So our first example are 2 first-time buyers. So we have one who works in the public sector and one who works in the private sector. So our teacher is currently on 0.8 of the scale, which is a basic of 46,000. Just for the purposes of the example, I should say we have rounded off these figures. So pay point 8 is 46,000. So we can go 2 points up on the pay scale of the teacher up to 0.10. So this will be a basic income of 49,000 that we can actually use. So the allowances then on top of that, so that might be your qualification allowance or your deputy principal allowance or your principal allowance. Any allowance that you receive, we can include 100% of your allowance. So the total for the teacher income that we can take is 59,000. Then for the partner's salary, so this is just private sector, so we'll take the 56,000. We combine the two, and then the total mortgage, we multiply that by 3.5, and the total mortgage that we would be able to offer this couple would be 402,500. So as they're first-time buyers, we'll be looking at an LTV of 90%, so they'll be looking at a purchase price of around 447,000. Our second example then is we have 2 public sector employees, so working for the Department of Health and the Department of Education. So they're both clerical officers. So our first applicant is on 0.4 of their scale on a basic of 54,000. And then our second applicant is on 0.6 with a basic of 36,000. So if we look at the first applicant, so we can increase their basic by 2 points up the scale, which bring it up to 57,000. Then they're also in receipt of an allowance of 3,000. So the total income we can use for our first applicant is 60,000. And then for our second applicant, again, we're going 2 points up the pay scale. So from 36,000 up to a basic of 39,700. So between the 2 applicants here, we're using an additional around 7,000 by just going 2 points up the pay scale. So combined then, they are entitled to a mortgage of 371,000. And again, at 90%, they'll be looking at a purchase price of around 412,000. Our third example is just a slightly different scenario. We have 2 public sector employees, so they're looking to switch their existing mortgage, and then they want to release some equity to do some home renovations. So both public sector clerical officers, our first applicant is on 0.7. So when we increase it up to 0.9, and then we include allowances there of 2,000 at 100% of those allowances, we can use an income of 63,000. And then for our second applicant, they're on 0.9, which is 41,000 of a basic. So going 2 points up their pay scale results in an additional 3,000, so up to 44,000. So in total, this couple can borrow 374,500. So they'll clear their existing mortgage of 220,000, and then they'll have an additional 154,500 to complete the renovations on the property. And then the last example, we have another just slightly different scenario. We have second-time buyers. So again, 1 public sector employee and 1 private sector employee. So our public sector worker is a midwife. They're on 0.5 of the scale on a basic of 65,000. So going 2 points up the pay scale will get them up to 67,000. And then we just combine that with the salary of the public sector employee of 45,000. So the total loan amount that we could offer here is 392,000. And as your second time buyers, it will be a maximum LTV of the 80%. So purchase price of around 490,000. So those are the worked examples. Hopefully it kind of demonstrates how ICS Mortgages can offer a higher loan amount when we go 2 points up your scale on and using 100% of your allowances. So I can pass you back to Ray there now.
Okay, thank you very much, Fiona. That's great. Okay, I'd just like to mention as well that the recording of the webinar will be available on our website tomorrow as well, just if you wanted to mention this to any colleagues. So next up, we've got Tom Birch. Tom is the head of our direct lending team, and Tom is going to talk to you about the mortgage journey.
Thanks, Ray. Evening, guys. Hope everyone's doing well. As Ray said, I manage the direct lending team here at ICS, and I'm just going to take you through the step-by-step process so sort of from pre-application to drawdown of funds. Now, we've sort of categorized this as a 10-step process, so this will be a whistle-stop tour of that. So step one, it's pretty simple. Pick up the phone and give us a call. Either call us directly or a local mortgage broker. And it's very much an introductory call. We'll go through some high-level details, as Fiona and Tom had mentioned. Probably a good idea for the public sector members here to have a copy of your salary scale, know what allowances you use, because that will allow us to give you an accurate figure and we can work out what you'd be eligible to borrow. And really at that point, if you're happy to proceed, that's when we would move and issue the application pack. So the first thing, we will go through is the application form. You'll either get sent by either myself or a member of the lending team or your local mortgage broker. And there's a few different settings here that we'll maybe run through. So personal information, income details, employment details. So all very high level stuff. We're going to be getting to the application form and show you what it looks like afterwards. Savings. So, this is where you can demonstrate, saving over a prolonged period of time to demonstrate the repayment capacity. Financial commitments. Property details. If you found a property, if you don't, you can leave that blank. There's no worries there. Your credit history. Details on the type of mortgage you require. And finally, solicitor details. Now, I'm just going to, this is the application form. I hope you can see that clearly. It's quite clear. It has live fields, so you can fill it in on your computer. And I suppose the main thing, if there's anything you're not too sure of, give us a call. We're more than happy to help, and we can talk you through anything you're not too sure of. So, just pick up the phone and contact us, and we can help you with that. So straightforward. We can give you guidance, and like I said, live fields. Additionally, as well as the application form, we will send you a supporting document checklist. So this essentially just outlines the different documentation you need to submit alongside the application form, so we can send it to our underwriters for assessment. Now, one thing that we just wanted to note, we are partnered with IDPal, we're registered with those, and that is essentially an app that will just assist with the verification of your proof of ID and address. Now, I'm sure we're all aware of the restrictions that are in place currently, and it can be quite difficult to go to your local Garda station or get an accountant and solicitor to certify documents. This is a simple, straightforward method. It's very secure as well, and it's just an app you download on your phone that will allow it to do it for you and ultimately speeds up the journey for you. Here's the supporting document checklist. So the top two tabs, proof of ID. So we accept a passport, driving license, or national identity card. Proof of address. So anything dated within a 6-month period, utility bill, bank or credit union statement, credit card statement, or local authority documents. The application and declaration form that we've seen. 6 months original continuous current account statements. Now, like Tom had said, if you have more than one account, please make sure you send all the accounts in. Things like Revolut, credit will want to see your day-to-day banking, your income going in, any rents that you pay, and any loans that you have. So if you have more than one account, it's best practice, just get it all sent in, because ultimately it just speeds up the process with getting the approval. As well as that, we need to see the balance of funds as well. So if you do have a separate savings account, then we'd need to see 6 months savings as well, just demonstrating that build up over that period of time. And then, if you do have any credit cards or loans, best practice just to send the last 6 month statements for those as well. Now, onto the income documentation. So, for public sector employees, what we will need is your salary cert, your last 3 pay slips, and your employment detail summary. Now, some of you may work within a certain sector that will allow a statement of earnings. If you do get one of those, please send it in. We find it very useful. It just has a very in-depth breakdown of what the basic is and any allowances. And ultimately, the key is to get as much of that added back on as we possibly can. So, this will allow us to do that. Now, if there's a joint application and one member is self-employed, that's not a problem either. Just a couple of extra bits that we need from those. So, what we'd be looking for is confirmation tax affairs are up to date. So either a letter from their accountant or their e-tax clearance certificate, the last 2 years accounts and the last 2 Form 11s, and 6 months business current account statements. So once we have all the documents in, we send it to our underwriting team and they will assess the application. Now, all being well, it goes straight to approval in principle. This is valid for a 6 month period of time. And it's a competitive space, finding a suitable property, as Graham will probably go a bit more into. A lot of sales agents will look for that approval in principle document immediately. So before you're allowed to bid on the property. So, if you haven't identified a property, it probably is the perfect time to apply. You get the paperwork out of the way and get the approval in principle documents. So, you have that piece of paper ready to support you with bidding on any potential properties you like. Now, at times, we may need more information before we can get to approval in principle. The lending manager or your broker will talk you through this. Credit may have certain clarifications based on the details you've provided. Most of the time, these are very straightforward, but, if they are asking for further questions, pick up the phone, we'll have a chat about it, and we'll be able to give you some assistance with that and hopefully turn that into an approval in principle. The next step, like I said just a few moments ago, once you've got the approval in principle, it's time to then go looking and find a suitable property for you. It's a lot easier once you have the approval and what we're prepared to lend to you. That way, you can set your budget and narrow the search on properties. And like I said, Graham's going to be talking you through a few slides and give you some tips in a few minutes. Now, step 5, once you've located the property and you go sale agreed, the next step really is finding a valuation on that property. So, the best bet is, give us a call as soon as you've found a property and tell us the good news. And the next step, we'll assist with getting a valuation instructed. We use a company called VMS, Valuation Management Solutions. They will assign a local valuer from their panel to go and value the property. And also, this is the point to pick a solicitor that will be working on the legal side of things for you. So, it's known as the conveyancing process. So once you are sale agreed, let us know what solicitor you're using and instruct the valuation. And now's probably a good time as well to start looking at different insurance products. So we will require buildings insurance on the property and also life assurance. Now, we have a partnership with New Ireland on this. They will price match the best in market, and we will provide information to set you up and introduce you to New Ireland. Now, once we have all of this and credit have looked and the underwriters have looked and assessed the valuation and everything comes in fine, we will issue the letter of offer. So this is the loan pack that will go out to you and also go out to your solicitor. So, in your loan pack, it will contain the letter of offer and an ICS document. That's the European Standardized Information Sheet. which outlines full details of the mortgage and terms and conditions of your loan. You know, it has all the key details in there: rate, term, cost of credit, and any conditions that are attached to it. And then once your solicitor gets sight of the loan pack, you know, they will review the loan offer documents. And once both them and you are satisfied with the finer details of this, that's the point really when you're in a position to sign the contract. So they will engage the seller's solicitor, known as the vendor, and they will exchange contracts at that point. And then the final step, you know, the solicitor will send in the information that's required. We will issue the funds to them, and you will collect the keys to the new property. So that's really it from me. You know, if you do have any questions, then please let me or a member of the team know. We're more than happy to help. Thanks a lot, Tom.
Okay, thanks very much, Tom. So we're starting to get some questions coming through. So if you want to submit questions, please use the chat box on the webinar, and we'll address those questions in the questions and answer session. So right now the property market has been getting a lot of coverage in the media, and to help you navigate through that market, I'm delighted to say that we've been joined by Graham Murray from Sherry Fitzgerald, and Graham is going to talk about some of the top tips that you need to consider when searching for and purchasing a property. So over to you, Graham.
That's great, Ray. Thank you very much for that. And good evening, everybody. As Ray mentioned, my name is Graham Murray. I'm a regional director with Sherry Fitzgerald. I've been operating in the residential market now for a little bit over 20 years. I think hopefully most of you will have heard of Sherry Fitzgerald at this stage if you're considering buying a home. We've been, again, working the residential market for nearly 40 years and over 100 offices nationwide. So hopefully we'll be well placed this evening to give you some, I suppose, some top tips when searching for your property. So I suppose the starting point, it's actually what Tom referred to. I suppose it's ensuring you know what you can afford and all the costs involved. I know it sounds very basic, but we do get an awful lot of people kind of starting the property journey without knowing what they can actually afford. So they end up wasting time looking in the wrong locations for the wrong type of properties as well. Have your mortgage locked in and the deposit ready. As Tom mentioned, again, pretty much all agents these days will look for proof of funding, POF, at the bidding stage. I suppose talking to somebody like ICS Mortgages gets you best place in terms of knowing what you actually can afford and being ready. With the proof of funding, they will always look for the approval in principle and also look for the deposit amount you have on account by way of a screen grab or a statement. Have a solicitor lined up, and actually I would do this actually quite early along with a surveyor, so at the beginning of your process. So somebody's a surveyor who's reputable and a solicitor, again, who specialises in conveyancing. I suppose the importance of the above is that when you're discussing these, your buying position with the agent, you're painting the most proactive, most positive picture you possibly can. Ideally, you are their ideal buyer in terms of when you're bidding on a property. Sign up to the property portal sites again, just to receive the automated updates by Daft or by My Home. Again, keep your search criteria broad. You'll get as much in as well then on the automated updates. And this also gives you a really good sense of what you can actually afford, what the house type you might be looking for, and the value that these homes are trading at in that area. Another thing to be looking at is the property supplements on the Irish Times on the Thursday, and indeed the Indo releases one on the Friday, and most Sunday supplements have them as well. New home developments, most again will have buyer lists that you can sign up to. And actually a lot of them now are doing kind of site development updates, so you can actually they'll release videos of the updates actually building up of the new homes themselves. This is more to do now with second-hand property, but do get to know the estate agents in the area that you're looking to buy in. Be proactive with them, engage with them, get back to them. If they're sending you emails, phone calls, they're more than likely going to let you know about the new homes coming to the market before they hit the market if you're kind of actively engaged with them. So some key items to consider. First step is just establishing what's important to you. What are your non-negotiables? What will you flex on? What will you not flex on when you're looking for items? Kind of some of the key considerations: location, space, bedrooms, garden size, orientation, parking. For some people, parking is hugely important. For others, it's a non-starter. It doesn't even come across their radar. Orientation is a big one. A lot of people will only buy a house with a south or west facing garden. But again, some will sacrifice that if they get a large garden. Public transport, road network, cycleways. just the travel time, your commute time. But again, now with the advent of, I suppose, working from home, a lot of people are looking at this, and this is a bit of a game changer in terms of how people are looking at their work, and indeed how they're going to be getting to the office as well, public transport versus cycling. Management fees, just something to consider. Some of the developments are only €500, so fairly nominal. Others are a few thousand, so just something to consider in your annual budgeting. Schools, for some people, first-time buyers, again, you may already have a family, considering starting a family, or again, might be on the radar just yet either as well. So primary, secondary, school ratings, public versus private and catchment areas. Facilities and amenities, facilities, shops, restaurants, is important to you? Are you happy to hop in the car and drive, or do you really want to be able to just walk around the corner to your local shops? Outdoor amenities, again, with COVID and working through that, this has become a huge, huge thing for people now. Again, we find a lot of people now are looking to be within walking distance of parks or coastal areas, mountains, that type of thing. Check out an area if it's not familiar to yourself. View the house at different times of the day and the week. Do drive-bys, talk to the neighbours. You'll find that, you know, some estate agents in the past may have actually shown houses on busy roads at maybe non-busy times. So go out and have a look at these at all different times during the day, at the week and weekends. Have a really clear understanding of what you want. I can tell you right now, it eliminates a massive amount of time, weekends out viewing, evenings out viewing. So just be very clear of what's important to you in your property search. I suppose now that you find the right home or the perfect home, talk to the agent and find out as much as you can about why the property has actually been sold. Is it an executor sale, often referred to as a probate sale? Are the clients trading up? Are they trading down? They're moving out? This can really dictate the type of buyer the seller is actually looking for. And a first-time buyer, whilst probably most agents will prefer kind of cash buyers, a first-time buyer actually gives a lot of flexibility to sellers. So a seller who maybe is trading down mightn't have found their own home, and they need somebody who can actually give them flexibility in their closing dates. And actually, for most first-time buyers, you can offer flexibility. So I'd always play into that when you're talking with the estate agent. Talk to the agent and find out why. Talk to the agent for the type of buyers that you're competing against. Again, this can be important. If you're looking at a house and you're competing against somebody who's trading down, they may not have sold their own house yet at this stage. So again, being a first-time buyer actually works much better from the agent's point of view. When you find a home that ticks all the boxes around bidding, we often get asked this. My personal view is you bid decisively. This can put off the competition. For some, may sit around on the fence and wait, but the problem there is that the agent may get an offer and the client dictates that they just go ahead and accept it. So for buying houses for clients for many years, I always find the best way is to bid and bid decisively. And this can kind of push the competition away. All your bids should be submitted in writing to the agent so they can be discussed with the client, and it gives you as a buyer a bit of a paper trail there as well. The greatest delays, I suppose, with any sale will always occur when you go sale agreed. Just when all the difficulties come up, you've got a seller, you've got their solicitor, you've got a buyer, their solicitor, surveyor. So many more people actually end up getting involved in the process. And this is where the time delays and difficulties will actually occur. So as I said, just let calm heads prevail. That's the best thing I can do in terms of advice for this process. There's always difficulties, but do keep with it. If it's a home for you, keep with it. And I'll just wrap up and say that based on our website as well, we've got actually a lot of buying guides. So if you're buying a new home, we have a guide dedicated to that. If you're buying a second-hand home, we have a guide dedicated to that as well. So that's me. So thank you very much.
Thank you very much, Graham. That was great and very, very informative. So very, very much appreciated for that. Okay, so just in summary, just to recap, what I'd like to say is that we have a team of highly qualified, very, very professional consultants. They're very familiar with the public sector pay scales and allowances and the terms of your employment. And it means that we can assess these applications very, very efficiently. Your income will be considered to be 2 points of your current pay scale. So that gives you a lot more flexibility in terms of how much you can borrow. And it's a very, very nice feature of the product. We offer a very competitive range of variable 3-year and 5-year fixed rate mortgages, starting at 2.4%. It's really important if you're looking for long-term value to consider, what the rate is when you roll off these fixed rate periods. It's not uncommon for, cashback and teaser rates in the market, but then when you come to the end of your 3-year fixed term or your 5-year fixed term and you've another 20 or 25 years left to go on your mortgage, the rate that you roll onto can be prohibitively high, and just something to keep an eye on. And the way to compare that is to look at the APRC rate, which is your annualized percentage rate, including costs, and just something to keep an eye on. We have some of the lowest APRs ourselves in the market, and it's really, we're not looking to offer gimmicks or any kind of teasers. It's really just very clear, very transparent, long-term value for the full term of the mortgage. So we also have a number of flexible repayment options. So another thing to remember is, when you're on a fixed rate mortgage and you want to maybe pay a little bit extra, sometimes, some lenders will have what they call prepayment penalties. So, if you're on a fixed rate and you want to pay off something, you might have to pay what's called a break fee. We allow up to 20% of the mortgage to be paid off without any penalty over a 12-month period. And we also offer 3-month mortgage breaks within the life of the mortgage as well. So another attractive feature. So just, when you're doing your research, make sure that, you're looking at rates, long-term value, flexible repayment options, and really, really good customer service. And that's really what ICS Mortgages is all about. So if you want to contact us, you can contact us via our website, specifically the public sector mortgages pages. You can call us on 1890 427 427. You can email us, you can contact us through social media, and Tom and his team will be delighted to hear from you and delighted to provide some great service. We've had some questions come through already, which is really good. First one of the questions is, the examples for first-time buyers only include couples. What about single people? And we're absolutely delighted to lend to single people, and no issue about that. For overtime earnings, how many years back will you look? We typically look back for 3 years, where you have more than 3 years of overtime history. If you have less than that, if you've only been in the job for say 2 years, we would look back over a 2-year period, and so on. The next question then is, do you offer 20% deposit exceptions for second-time buyers? So I want to spend just a moment talking about exceptions, because it's an important point. The central bank in 2015 introduced a set of rules for lenders that effectively restricted the amount of money that you can lend. And there's very, very good reason for that. The 2 biggest causes of arrears in mortgages are leverage and affordability. And so the central bank, to address those 2 key areas, said, okay, let's reduce leverage and let's increase affordability. And the way that you do that is you restrict the amount of money that you can lend, and you restrict the multiples of income. The net effect of that is that house prices in Ireland, even though they've risen, and Ronan Lyons was in the media today, you've seen house prices across the country rise by about 90% from the absolute bottom post the global financial crisis. So around 2011, 2012, they're up about 90%. However, without these central bank rules, there's no doubt that, we could potentially be in bubble territory, because there's, at the moment, because of COVID, there's a shortage of property at the moment. And we can talk a little bit about that a little bit later as well. But exceptions are allowed, and exceptions for second-time buyers, we absolutely consider them. The way we look at these exceptions is, there are 3 sort of key elements to every mortgage, and that is, you want to look at the term of the mortgage, you want to look at the loan to value on the mortgage, and you want to look at your loan to income on the mortgage. Okay, so what we don't really like to see is where somebody's maxed out on the term, say 35 years, maxed out on the loan to value, and then looking for an income exception as well. The central bank put those rules in place really to protect the consumer. And so we're very, very happy to consider exceptions, but we do it in a very, very sensible way as a prudent lender. And what I would say is, when you're looking for an exception, do so with the term and the loan to income and the loan to value. Those 3 legs of the chair are very, very important. Okay, we'll just move on to a couple of other questions that have come in already. There is a question. Can you discuss the Help to Buy scheme, please? Graham, would you care to just maybe talk a little bit about the Help to Buy scheme? That's okay.
Yeah, again, it's very much as a predominantly, obviously, a new homes driven product there as well. It's nothing, it doesn't actually work or operate in the second-hand market itself. And it's there to encourage and help people to get on the property ladder and new homes developments itself.
Okay, terrific. Thanks for that, Graham. And just one more for you as well. We've had a couple of questions where people are asking about remote working and changes to the market where maybe people are looking for properties outside of the cities, looking for properties in towns, rural locations. Are you seeing a definitive trend, or do you think maybe it's just a short-term sort of COVID impacted change in the market?
Yeah, I think first of all, we're definitely seeing a trend of that actually happening within the marketplace. Like I would have a number of vendors even right now myself who are selling and they're moving down the country. Some can be just relocation because now's the right time to do it because workplaces will actually offer that. And some of the change in lifestyle. There is no doubt a section of the market that is willing to move and want to move down the country, but I suppose they're also still waiting to see what their work will allow them to do as well, actually. Is that kind of, do they need to be back in the office 3 days a week? Or is it 2 days? That means they can buy down, say, down the country or more further afield and then commute back into the city then as well. So there's no doubt there is a large trend of that actually taking place. In terms of sales of some of the property, though, what we are finding is people are doing that, but they're actually renting for a year or so just to see what it's going to be like as well. One of the big criteria that we find actually for people looking to do this, maybe outside of towns and villages, is actually broadband. So the broadband rollout is a huge thing for the National Broadband Plan, is a huge thing for buyers as well.
That's terrific. Thanks very much, Graham. So just another couple of questions. So this is for Tom Burt. Tom, how long does it take to get an approval in principle?
Thanks, Ray. So that's a good question. You know, all being well, you know, the typical turnaround time in line with CPC is 10 working days. Now, you know, we're willing to work with you and see if we can make the process any quicker. But, you know, ultimately, you know, it's back to the list of documents that we need. You know, if we can get everything right first time and get the supporting documents in, then, you know, we'll look to turn it around in 10 days.
Okay, terrific. Thanks very much for that, Tom. Fiona, one question for you. How does having children affect your mortgage application?
Yeah, so there is an expense. We have a calculator that we draft up. We put in all your loan details, and then we put in if you're married or single, and of course, if you have any dependent children, or indeed an adult dependent, if you have a partner who isn't working, we need to factor in a cost for that dependent. So if you have a child, it's an additional €250 that we include for that child. So it will calculate at the end. So we take your income and then your kind of allowable monthly expenditure, which is recommended by the ISI. And then as long as the stress test actually passes at the end, that there is a surplus figure at the end, once we include all your expenses, if you have any other loans there as well, as long as the dependent is in there and there's a surplus NDI, we'd be happy to recommend approval then as well. And then once the stress test passes, I suppose we look at the mortgage repayment and the stress repayment, and then kind of Tom touched on it earlier on, we'll look at your rent and savings. And as long as even, I suppose you have to consider childcare as well if you have a dependent. So that cost would need to be factored in as well. But if all those costs and additional costs are factored in and you can afford the mortgage via, and you're proven via your rent or your savings or an existing mortgage, then we would be happy to approve it then at that stage.
Okay, terrific. Thank you very much, Fiona. We've had a couple of questions from people who joined the webinar a little bit late, asking about have we discussed you know, equity release and other elements of the product. We do allow equity release, and the good news is that the webinar will be available on our website from tomorrow, so you get a chance to have a look back if you missed any part of it. The next question that we have is, Is it better to go through a broker or to come directly to ICS Mortgages? So I have to be very diplomatic in how I answer this question. So look, both are good options. Is where I would start. Right now, if you want to get the best rates in the market, you can only get them through brokers. And for many borrowers, traditionally they would have gone maybe to their bank, to an institution that they have an existing relationship with, and just got a mortgage from them. There are a lot of differences, in the products that are available currently. We think for public sector workers, we like to think that we've got the best product in the market for public sector workers. It's a core part of our business, and we're incredibly focused. It is all that we do is offer mortgages, and we like to think that we're very, very good at it. You will of course get really good service from a broker. You'll get a different perspective. So what we would say is, talk to a number of different people, shop around, and what we'd like to think is that you will get very, very good value from ICS Mortgages, but it is of course worth doing your homework. And in the interest of transparency, it's good to talk to as many people as you possibly can. Okay, so Graham, I have one more question for you. This is, do you have any guidance about the recent phenomenon of going sale agreed for some properties before being able to view the property, or needing to pay a deposit to even view the property?
Yes, well, I suppose it's been over, obviously all the cities have had to kind of run by government guidelines. So what we've been doing is bringing property to the market, which we've been allowed to do, and then we've been virtually viewing them. In Sheriff Sherrill case, what we've been doing is carrying out, I suppose, where people have been interested, bidding process, taking in their offers. We wouldn't take any offers unless we've seen the AIPs and proof of money on deposit from bidders. And then once we've gone sale agreed and gotten the booking deposit, we then show the properties. Now, 95% of the cases at this point have proceeded ahead and they haven't fallen out of bed. But what I would say for a lot of people in terms of buyers and indeed vendors, they haven't been comfortable with that process. But thankfully, since Monday this week, it's been a very busy week. We've had a lot of viewings obviously lined back up now for physical viewings again. So that trend will now come out to the marketplace that we're back into physical viewings. But it is something that we certainly worked our way through. It's what we had to do, I suppose, the way the market was, and but it allowed the market still to function and move forward.
Okay, that's great. Thank you very much for that, Brian. Fiona, a question for you. One of our viewers has asked if they've been saving within their current account, but they've only recently opened a savings account. And they were just wondering, is there any issue with the fact that the savings account has only been in place for a short period of time?
No, it's fine. Like if there's a few accounts, that's okay. But if you were previously saving in your current account, say, we look at over the term of 6 months typically. So just say from month 1 to 3, you were saving in your current account. We can include that. And then if we can see that you've continued your savings then with your actual new saving account, we can combine the two, look over both of them over the 6 months. And if we can see that you've been meeting savings of approximately 1,000 and your mortgage payment is 1,000, we would be happy with that.
Okay, terrific. And just while you're on as well, Fiona, we've had a couple of questions on life insurance policies. One of the questions is, does every lender need life insurance policies? And do ICS Mortgages need you to have a life insurance policy in place?
Yes, this is a CPC requirement. We do need to see a life policy in place before the loan draws down. It should be enough to cover the mortgage in the event, if the unfortunate event, if one of the borrowers did pass away. So it is a requirement. It's something that we need to see before the loan draws down.
Okay, and then we've one more question on that, which is if people have an underlying medical condition, would you consider exceptions or a waiver of life insurance?
Yeah, look, it's possible. Like we look at each case on a case-by-case basis. If there has been a medical condition with one applicant, we can look at the application as a whole. If there's another borrower there, we'll look at their affordability and see if they will be in a position to afford the mortgage by themselves. We'll also look if the applicant who cannot get the cover, if they have any death in service benefit or anything like that, that in the event of the death, that could be paid off the mortgage, which would reduce the balance, make it more affordable for the surviving party. So there's a number of questions we ask. We have seen this scenario. There's a number of questions we can ask to try and get comfortable with it. It's something that we try and facilitate where possible, but it's a case-by-case basis that's decided by our credit committee.
Okay, terrific. Thanks very much. We've had one other question here just in relation to long-term contracts for public sector workers. So we have a question. I'm on a 5-year fixed-term contract with a local authority. I'm currently on my 2nd year of this contract. Am I eligible for 2 points up the pay scale increase?
Yep. Yeah, someone who's on a long-term contract like that, we would be happy to consider. That is one of the kind of offerings that we can look at. Even if someone is on a 2-year contract, rolling contract, public sector, it's something we consider. We just kind of look at their employment history, see if they have been in this role or similar role for a number of years. But I suppose if you're on a long-term contract and you're not sure, your best bet might be to contact the lending manager, just run the scenario through them, and they'll be able to give you good direction as to whether it's something that we would be willing to proceed with. But usually, yeah, like a 5-year contract like that, we will be happy to consider.
Okay, thanks very much for that, Fiona. That's great. This is for Tom Dowling. Tom, how long does the application process from application to drawdown, how long on average does that take? And what are sort of outlier examples of it being done very quickly or very slowly?
Yeah, thanks, Ray. I suppose it can vary case to case. Initially, the stage that we hold control on, I suppose the first that Tom Birch mentioned would be the application submission, getting your approval. That will usually take 10 working days to get to the next stage for a loan offer. Once a customer usually goes say agreed, they may be bound by a 21-day period to have a contract signed. So we try to have loan offers issued well within that time frame for their solicitor to review it. And they'll be also reviewing contracts just to make sure everything is as it should be. But the valuation can take up to 5 days. As Graham mentioned, we're now out of lockdown, so that should make it easier for valuers to gain access to properties, and we should save time there. So essentially, I suppose from a case being submitted to a loan offer issuing, it can be within 3 to 4 weeks. Once the loan offer is issued to the customer and the legal pack goes to the solicitor, it's really going to depend on the property itself and the solicitor who's acting on the customer's behalf. And just there might be title issues or whatever the case may be. I suppose, as Graham also alluded to, that there's a customer, there's a vendor, their solicitor, a borrower and their solicitor. So there's different parties involved that have to work together to make sure that all the legal requirements are honoured, and also that the legal requirements for ourselves are honoured. So typically, I suppose the average it can be 2 to 3 months to close that conveyancing process. However, we have had cases that have closed really quick, within 4 to 5 weeks from when a loan offer issued. Again, it really depends on the vendor side of things, that they have their legal affairs in order, and also that the borrower has done their homework, has their solicitor ready, and all parties are working as they should. So it can vary. Again, as a lending manager, we will always try to be assisting all stakeholders, I suppose, to make sure that everything is progressing the way it should. So again, it's at least you have one point of contact that if you do need assistance or to see where we are in the process with ourselves, we'll try and keep things moving as we can.
Okay, terrific. Thank you very much for that, Tom. We've only got a couple of minutes left, and I'm just mindful that we've quite a number of other questions still to answer. So what we'll do is we'll be able to take all of these questions, and then we'll do questions and answers on our social media, so you'll be able to follow that in the coming days as well. Graham, one last question for you is: it's been reported that there's a lack of supply of property in the market, and that the stock of property that's available for sale is significantly less than what you would normally expect. Are the prices currently at a premium, and when markets normalize, do you expect to see a softening in prices?
Okay. It's an interesting question. I suppose, yeah, we are at a historically low point in the market in terms of property being available for nearly 10 years. So you've got huge demand, very strong demand, and very little supply available. That has obviously been caused by, I suppose, COVID, lack of building, lockdown process. We are now starting to see more and more property come onto the market, certainly in terms of second-hand property. And as the building sites get back, they'll be able to release more new homes into the market as well. Having said that, yes, we are hitting a strong point in terms of very competitive demand, and prices are increasing, and they've increased quite a bit over the last, say, 6 months. I suppose it's a bit of crystal ball gazing when you look at terms of pricing. Will they soften or will they stay the same? I suppose it all comes down to levels of supply. What I would say is, even though we're seeing supply increasing, it's not going to get anywhere near meeting the levels of demand. So I suppose, like any advice, is always the same. If you find the right house and you're buying for the long term, then move forward with it. If you're looking to get in and out within the year, it's always a very tricky thing to kind of advise on. So I think prices will hit a point, and they'll probably, in that manner, then just stay at that level for a period of time. It's all down to supply, really, at the end of the day at this stage.
Okay, terrific. Thanks very much. We've time for just one more question, and one last question, which is, what are your view on where interest rates are going to go in the future? So I presume mortgage interest rates. Look, that's a tricky question. If you look in other jurisdictions like the UK and the US, we've seen sort of significant increases in inflation, and we're starting to see, for example, government bonds. The interest rates on government bonds are just are increasing. The Eurozone has been a little bit slower in terms of the inflation coming through. We don't really like to predict where we're going to go on interest rates. What we can say with absolute certainty is that interest rates go through a cycle. So at different points in time, interest rates are high and interest rates are low. And right now, interest rates are at the close to the lowest rate that they've been ever historically. And there's been some work done around Dutch government bonds, where the interest rates are on record for the last 500 years. And just in the last year, they were at the lowest rate ever in those 500 years. So look, interest rates are a big factor to consider. Where we are in terms of the rate cycle is an interesting point. And because there was a follow-up question about, should we be looking to fix interest rates for longer or for shorter periods? Look, that's really a question for the consumer. But in terms of where you are historically in the rate cycle, it's an interesting point to be looking at fixing for longer within the current market. Okay, look, all that remains to say is to just say thank you very, very much to everybody for dialing into the webinar. I want to thank all of our panelists as well. So to Fiona Mcginn and Tom Dowling and Tom Birch, and of course, Graham Murray from Sherry Fitzgerald. I want to thank our head of marketing, Joan Gleeson, as well, for organising, and our colleagues in Verve for doing a fantastic job on the provision of the platform. I hope you found it interesting. And please follow us on social media. We're active on Facebook and on Twitter, and on the website as well. And by all means, please reach out to Tom Birch and his team, and you'll be assured of a really, really good service. Enjoy your evening. Thanks, everyone, and good evening.